Hey everyone, welcome back to Pod Day Crypto. Happy Monday. Today we're going to talk about Chainlink against the US dollar and also talk about trend reversals, how to spot them easily, and what to look for on any coin. So let's go ahead and get right started. Chainlink USD on the daily chart, we're zoomed in here. And let's look at the current move. We're just above our 21-day moving average. This is our 21-day EMA, which is a good sign. But as you can see, we've tried to hold this the past month or two, and we've been unable to do it so far. We just keep coming back below it. But what you'll notice back in our January to February move, our big run up, we didn't even barely touch it at all. So that's what we need to look for in the next coming days and weeks, is we need to start pulling away from this 21-day and not continue to bounce around it. That's what you want to look for. So we're at $31, just over 31 now. We got to stop playing around with this if we want to have another big move up like this from earlier this year. So that's what to look for there. Now, what kind of trend are we in? We're in a new uptrend, as you can see this. Now, how do we know that this is not just going to go back down again tomorrow? Well, we don't know for sure. There's nothing for certain in crypto. The only thing certain is that it's uncertain. So, but you have to play the odds. You have to know what to look for patterns, and just to put the ball in your court and keep the odds on your side as much as possible. That's all you can hope for. So let's go ahead and look at what we've spotted and what you can do for in your coin or any other coin or any stock or crypto for the rest of your life. So you have your lows, your higher lows, you know you're in an uptrend. You want to also have higher highs and higher highs, which we had. Once you break that pattern, our low, here's our low, and then we had a lower low, and another lower low, and then another lower low. So we're starting to break that. That's not a confirmed break. You want to have another signal, which was confirmed here when we had a failed higher high. So your warning sign is your first break. Your confirmation is your second. As we're going down, we make lower low after lower low. We start moving back up again. And how do we know we're not just going to come back up a little bit and go down again? Is you have to look for a higher high. So our high was right here, this candle. So once we break that, we know that trend, that downtrend that started here is now broken, and now we're in an uptrend. We've reversed this. So what to look for next? Well, first of all, we're going to have to make a higher high. 33.20, 33.21 area in the next few days. If we come up here and we do not clear this and we make a little bit lower of a high and then stir back down, that's your first warning sign. Then you're going to have to look for a lower low, which is 28.64 roughly right here, this candle right here. If you see both of those, then you know we could be going back down again. On the other hand, if we're coming up over the next few days and you see us break 33.15 roughly right in there, then you can know that this is still intact and we're going to keep going up. Another thing you can do is, once you know that the direction you're going, which we know for now that we're in an uptrend, draw a bottom trend line. You can zoom this in. You can put it on even a 4-hour if you want a little bit more help. But as you can see today, our low that we want to hold. Now with wicks, who cares? Body candle closes is what you want. So body candle close today, 25.50 roughly. Tomorrow, it's going up by about 50 cents, right? $30. The next day, about almost 50 cents a day. If you notice the pattern here, now it's slowing down a little bit. Just under 31 now. So look at the dates. This is only 3 days from now to keep this trend alive. So if we want to zoom in and get a little bit more help, or maybe a little bit of a earlier signal, you have to adjust these sometimes because there's different closes, right? A 4-hour close is going to be different than your daily close. But you want to draw it with the most touch points. Your trend lines, you want to draw with the most touch points. That's it. The more touch points, the stronger the trend. If you see someone drawing a trend line, so to speak, and it has one candle wick touch here and one candle wick touch here, that's not a trend line. You must have at least 3, and the more the better. Certainly on like a 5 or 15-minute chart and someone's drawing a trend line with 2 touch points, that's ridiculous. Now, if you have 30 touch points on a weekly time scale, you can know that that's going to be a super strong trend line. That's more than likely going to be met with some big resistance or support, whichever way you're going. So this is our 4 hours zoomed in. So in the next 4 hours, our candle closes in 2 hours, so we're about halfway through this. But look at how much more space you have here. So we can get a lot of volatility in through here over the next few days. So that's how you can do that. Get some warning signs. Now, if you start breaking this, you're getting close to it, maybe you want to go back to the daily and see where we're at. But you remember that every day we go along this, prices are increasing by about 50 cents roughly. So that's for Chainlink, trend reversals in general for any coin. Let's go look at it on the bigger picture. This is Link on the weekly. This is on a log scale. But look at what it's done over the past year, since last March. I mean, it's pretty amazing. So look at from the bottom, last March, to the very tippy top, just 2,400%. So, not bad. 12-year span, bottom to top, 2,400%. I mean, we're not there anymore, but we're still at just a little weak 1,900%. So Link is still young. Link has still not made its move like it did back in here. So this is what we want to look for in the coming months. Now you notice like its start was almost a year ago to the day, right? April 6th, the week of April 6th. So this week, next week, maybe we can get a run going. This doesn't have to repeat. Obviously, nothing has to repeat, but history doesn't repeat, but it often rhymes. So I'll leave you with that. You can notice we're running into our line here. If we start moving up again, your 21-week EMA line, the yellow line here, is what you want to hold in any coin that you're looking at. 21-week EMA. That is key. You can see we haven't broken it with any candles since our major drop last March, over a year ago. So if we ever to come back down, that is moving up by the week as well. Let's see what it's currently at. 23.77. So that will slowly continue to rise as long as prices don't capitulate like this. But even this kind of move barely flinches this 21-week EMA. And this line is just an average of the previous 21-week candle prices. So now you know. If you like it, my name's Chase, 5-Day Crypto. We make new videos every day, new charts. Follow us on Twitter, Telegram, Patreon. Patreons if you want to learn a little bit more in-depth stuff, more one-on-ones, private stuff with me, private Telegram on there. I'm active in that every day, so everything is linked in the description below. Like us, subscribe, appreciate it. Car of the day is Mercedes S500. Nothing super special about this one, just S500 Mercedes. Pretty much in every 2000s, 90s gangster movie ever. So S500 is a boat on wheels. Huge car. Now our quote of the day. Thanks so much again, guys, for watching. Thank you for staying around this long if you did. 76 gold stars today. You deserve it. It's Monday. It's Masters Week. Any golf fans out there? I'll be watching the Masters this week for sure, afternoons. After I'm done, we're going to have to speed this up. Just watch it and fast forward so you can watch the Masters. See you guys on the next one.